Good morning, welcome to CupO'Forex. This is your daily video analysis for Wednesday the 10th of September. I'd like to talk about some data that just came out of Australia. It's a little bit interesting, as well as data that's going to be coming out of China a little bit later on. Overnight, the U.S. Stock markets were down a little bit as investors are starting to worry about interest rates. We saw the U.S. Treasury sell off a little bit overnight as well. In Europe yesterday, their markets were down as investors are starting to worry more and more about the vote in Scotland. As we wrote in our feature article yesterday, Scotland in the next couple of weeks is going to have their referendum on whether or not to leave the United Kingdom and the monarchy. Okay, let's scroll down to our economic calendar. As of right now, the Asian markets are also down quite a bit. Sydney and Taipei are now at multi-week lows. Why is Sydney down? A little while ago, Australia released its consumer confidence numbers, and we show a sharp reversal of fortunes here. The number was down 4.6%. The month previous, it came out at 3.8%. So we're seeing a big reversal there, and it kind of shook the markets a little bit. A little bit later on today, we have out of China, very importantly, new loans. We're going to be watching this number closely. China has been making small steps to inject some money into their financial systems in order to support the markets. And we want to see where this number comes in. Also this morning, in the next 6 hours or so, Germany is going to have a 10-year bond auction. We're going to be watching where the interest rates coming out of this. And later on today, out of the United States, we have the NBA mortgage applications and crude oil stocks inventories coming out. We want to see where these numbers come out. We're expecting out of crude oil, their stocks to change to be down about 1%. So we're going to be watching this number. Okay, I'd like to take a look at some technical analysis this morning. Okay, let's get started with our technical analysis. We want to take a look at gold real quick, as we saw a sell-off in bonds in the United States last night, especially in treasuries. That also affected the U.S. dollar. Money came out of the dollar a little bit, and where did it go? Looks like it went into gold. As you can see here, gold has been running a medium-term trend line. We are now at a critical technical level near 1236.80. We hit, this trend line is riding that level pretty good. If we can see a good strong defense here and an uptick towards 1260.80, then we can retest the T technical level of 1280. It looks like we did have a nice little bounce here yesterday. We're going to be watching gold closely today. I also want to take a look at the dollar index. We're still well above the key technical level of 80. There was a time when we were very worried about the dollar index, as we were below that, trading close to 79.10, nearly 78.90 in this, which is below that key level of 80. We're now at highs near 84.30, 84.13 right now. We did see a bit of a defense at a technical level of 84.30 overnight, and we retreated a little bit. You can see the formation of the bearish candlestick pattern, which you're going to be watching. The dollar index closed overnight at 84.13. It's currently trading in early Asian markets a little bit down right now. Okay, let's continue with the FTSE out of London. As I mentioned before, global markets worldwide have been selling off quite a bit. We hit a low yesterday in this market near 64.59, and we're currently trading at a technical level near 68.20 right now. What we see here is the formation of a shooting star. So this market is a little bit on the bearish side right now. We're going to be looking to see whether we can defend at this level. If we could defend at this level today, we could rise back up to 68.20. But again, with all the geopolitical tensions coming out of Europe, plus what's happening in Scotland, we could be in for a nice little ride on the FTSE over the next couple weeks until that's resolved. I also want to take a look at the pound dollar again. This currency, like the euro, has been extremely weak. All these tensions coming out of Ukraine, and now, especially what's coming out of Scotland for the sterling, is affecting the pound. Like I mentioned yesterday in our featured article, should Scotland vote yes, that's going to be bad for the pound. And we seem to have defended a little bit at a key technical level, right near 61.6050. If we can continue this defense, as you can see here, we closed on an uptick. Then the next challenge right above here is a level at 1.6150. Could be a tricky technical level to overcome, and we might be locked into a bit of a consolidative pattern, at least until the vote in Scotland. Sterling dollar, let's watch that as well. I want to thank everyone for listening. Check back again tomorrow when we have our next video. Have a great day trading.